Hey guys, how's it going? It's Andy from Magoo Investing. Happy Thursday. Today's Thursday. I'm kind of losing track of time during this quarantine, but in today's video, I wanted to discuss how I would invest $1,000 right now. This is a topic that comes up a lot on all these investing channels. During times of the year, people are looking to get into investing. I think now might be one of the best times we've had in the past maybe 10 years. Stock market has been falling a lot, and there's been a lot of questions and individuals that I know that have been reaching out to me asking, hey, what do you think's the best deal right now? So in this video, I'm going to make a theoretical portfolio if I was given $1,000 right now and I had to invest it in the stock market immediately. Some of the criteria I wanted to do for this video is not use any of the companies that I talk about on this channel frequently or that I actually own in my actual portfolio. This just means that I'm not going to be talking about Twitter as my favorite company and something that I really would love to invest in again. So I'm going to be picking stocks that I have never owned in the past and stuff that I think is a pretty good deal right now and is a relatively safe portfolio for someone that's looking to get into investing. Also, the other criteria is that I have to use all $1,000 right now. Just the idea of I could go with the absolute cop-out and say, oh, I'm going to hold on to my $1,000 or maybe use $500 of it now and then use $500 later. I'm saying that if I was given $1,000 right now and I had to invest it in the stock market right now, what are the stocks I'm going to be looking at and the reasoning behind that? This is going to be for a longer term portfolio, something that I'm not going to go in and individually day trade. There's going to be companies that I'm going to be holding for a long time, and in the next 6 months or maybe a year, I'm going to look back at the portfolio that I've created for this video and talk about how well it's done compared to my actual portfolio and how the overall stock market is done as a whole. One of my favorite things about the stock market is you just have so much information about the decisions that you've made in the past. You can look at the stock history. Maybe there was a company that you bought you didn't really love, and then you sold it, and you can see how it did after you let go of it and see if maybe you made the right or wrong decision, and you can learn from that for future time. So I'm going to be going back in probably about 6 months to a year and look to see how my companies have done. Before we get started, I gotta say that I'm not a licensed financial advisor and I highly recommend talking to a professional, so I'm looking to find you the best place to put your money going forward. In addition, I really appreciate if you hit that like and subscribe button, as would help my channel out a lot. This video is going to be a lot of hypothetical situations and all of my opinions, so do your own research before making any decisions. Alright, so the first stock that I'm going to be picking is going to be 30% of my portfolio, meaning $300, and that's going to go with AT&T, ticker symbol T. AT&T has been a company that I've been watching for the past couple years, mainly because I know it's been a part of my dad's portfolio for a long time, and the reason I've known about it is because of the incredible dividend that it's given. The reason it came back onto my radar is I just have Wall Street Journal send me news articles for stuff that's happened during the day. And on Monday, I got the notification that AT&T fell down to 10-year lows. And that just kind of blew my mind. But then when I looked at the charts, you can see how relatively stable the stock price has been for the past decade. And this is not the type of stock that you're going to be going into for a really aggressive growth portfolio. The reason behind taking AT&T is because of their relative stability and the incredible dividend that they give. Doing research for this video, I was kind of surprised to see all the areas that AT&T is a part of at this point. Based off of my naive mind, I just kind of assumed that the only thing they do is stuff with phones. And it is true that they are the largest telecommunications company in the world. But after doing research for this video, I found that they have a lot of funds tied up in media businesses. And the main one is their merger with Time Warner. So in 2016, it came out that AT&T was trying to buy Time Warner for $110 billion, and it took around 2 years for that deal to go through. The main reason behind that is the Department of Justice was trying to fight that, saying that there was some competition problems for them buying this massive company. And by the end of it, it took 2 years for the deal to go through, and it went through for around $85 billion. The time that this deal was made, it was mainly to get AT&T into the media field. Time Warner is a massive company that has stuff like HBO, TNT, TBS, and just so many other fingers of their business. But it's this expansion on their business model that's actually putting them in some tough waters right now. And the main thing that I could find for people talking negatively about AT&T is the fact that sports are pretty much canceled, and some of their major income sources are from March Madness, basketball, and stuff like that. And so TNT and TBS are very heavily into the sports field, and the fact that that's shutting down has people worried for the long-term future of the company. But these long-term concerns are kind of not that extreme compared to some of the companies that we've talked about on this channel. Stuff like Gamestop, which I've been picking on for so long, and I'm just waiting for them to finally go under. But AT&T has been lowered for their analyst rating from a buy to a neutral by two of the major firms on Monday, which pushed them even further. So they don't love AT&T, but the reason that I love AT&T is the fact that they've increased their dividend for 34 straight years, and it's at 7.5%. During times when the market's falling, people often look at dividends as being one of the first things that companies cut to try to save money. And when I talked about Macy's, which is a company that I was very bullish on just a couple of months ago, one of the main worries that I had is that since the stock had fallen so far, the dividend was really high. And I was worried that if they cut the dividend, the company was not going to be a great investment anymore. And so people had kind of the same worries when it came to AT&T. 7.5% is a pretty big dividend. It's not the largest you can find, but it's still pretty good. But they came out this week and said that they're going to be slowing down their stock buybacks in efforts to protect their dividend, which for people like myself that are looking to get into this company for the dividend, this makes me feel a lot better about my hypothetical position. So based off the fact that they've been a relatively stable company, they've been increasing their dividend for 35 straight years, and the fact that they're slowing down their stock buybacks in an effort to protect their dividend has me feeling really good, and that's why it was my first stock I wanted to talk about for my hypothetical $1,000 portfolio. The second stock I wanted to talk about is Nike, ticker symbol NKE. This is one of the companies that I have a certain affinity towards based off the fact that I'm living in Nike territory in Oregon, and it's pretty much, the Nike name is attached to pretty much everything in this state. There are three main reasons for the reason that I love Nike during this time. One of the ideas is that they're a consumer staple. In my video where I talked about areas to look to invest when the stock market's going poorly is looking at consumer staples. That's why I talked about stuff like Coca-Cola, where when things are not going that well, people are going to cut back on the big expenses like travel, cruise ships, but they're not going to cut down on their consumption of Coca-Cola products. And I was kind of worried about Nike when all this, the stores shutting down started coming out. And I was worried that their bottom line was going to get hurt. But we've seen incredible resilience on their business model, and it's showing that people are still buying their products, but they're just doing it in different ways. Instead of going to the brick and mortar stores and buying them, they're buying them from online sources. Another reason why I really like Nike goes off another idea of that the blue chip stocks are probably the best bet when the stock market's falling. And the reason behind that is the sector leaders usually have the best financials, they have the best track record. So when things are going poorly, they can survive during these tough times and are usually the first ones to rebound. And Nike is definitely the leader in all the sectors that they're involved in. On Tuesday when they announced earnings, people were kind of curious to see what their numbers were going to look like because it's been well documented the fact that a lot of the world has been pretty much shut down, and they announced numbers that looked really good. When I put the revenue up over time, you can see just how steady of an increase it's been. They released revenue at around $10 billion, which is slightly lower than what we've seen in the past couple quarters, but for how worried investors were about their overall damage from coronavirus, I was pretty happy with this, and it seemed like investors felt the same way. The stock has been jumping in the past couple days and has been doing extremely well. Some of the big news events that came out of this is the fact that their digital sales were up 36% over the last quarter, and that accounted for 20% of their overall business in the past quarter, which is showing that people still want Nike products. And the fact that they can't go out and physically buy them, they're going to other ways to purchase the goods that they want, and it appears like it's going through digital. Nike announced that their usage on their app had gone up 80% over the past quarter, which 80% is just a ridiculous boost in their overall usage. And it shows the fact that people love Nike brand, and during these tough times, people are not going to be cutting back on this. A couple weeks ago, I was feeling a little hesitant talking about Nike, but these earnings show that people still feel positive about the company, and it shows that investors are also wanting to be a part of it, which is why it's going to be another 30% of my portfolio for $300 for Nike, ticker symbol NKE. The third company I want to talk about in this video is going to be another 30% of my portfolio size, and that's going to be with Microsoft, ticker symbol MSFT. I'm not going to give a super long explanation for why I love Microsoft. It's been a company that I've talked about a decent amount on this channel, but the main reason that I love Microsoft, one, they're one of the three largest companies in the world, and the other reason is that they have three really varied revenue sources. And the reason I love this is during this unprecedented time of just global shutdown, there's a lot of uncertainty in the world. And with a company that has they're pretty much broken up into thirds for their revenue sources. So if one of their sources of revenue, say maybe the overall hardware sales drops, their cloud and software sales can pick up the slack if that's what it needs. And the fact that they're really big into software and cloud storage during this time where it seems like a lot of people are going to be working from home, I expect them to do really well compared to how they've done in the past couple quarters. Hardware sales are probably going to be going down, but overall their business model seems really well set up to take advantage of this really strange time in the world. When I put up the 1-year chart, you can see that even though the stock has fallen, it hasn't fallen that much. And when I put up the 5-year chart, you can just see how incredibly stable this company has been. This is a company that I would feel comfortable holding for 10, 15, 20 years and not really worry about it. Microsoft has been one of the best companies to own in the past, and I think that will not be changing in the future. So that's why I wanted it to be another 30% of my portfolio, bringing the total up to 90. And for people that have been paying attention at home or just listen to me just say 90%, I'm missing 10% of my portfolio. And the reason behind this being so low compared to the other three areas is the fact that I wanted to hedge my portfolio, which means that stock number 4 is going to be the 3 times weighted inverse ETF SQQQ. The reasoning behind this is while the stock market has done really well this past week, I don't think this is the bottom. And to protect myself from a lot of downside risk, I wanted 10% of my portfolio to be shorting the market. So for people that didn't see my last video, what SQQQ is a 3 times weighted inverse ETF that follows the NASDAQ. So if the NASDAQ goes down 1%, SQQ goes up 3%. And the reasoning that I wanted this to be a part of my portfolio is that there's a lot of ways to hedge your portfolio or short the market. There's a lot of stuff with options, but I think that SQQQ has been my personal favorite over the years, just for the fact that it's just like buying and selling any other company. Options are a lot more complicated and there's a lot more risk. SQQQ, if the market continues to go up, that's the reason why it's only 10% of my portfolio. If I take a loss on that, I'm not that upset about it, but it's going to protect me a lot if the market continues to fall. Also, the reasoning behind 10% is the rest of my 90% are in companies that I feel really strongly about for long-term positions. So it's not going to freak me out if the stock market continues to fall because I have SQQ to take in a little bit of profit as things fall. And if the market starts to recover, the world economy starts picking up and coronavirus goes away, or I can sell it and put it into TQQQ, which is the positive version of SQ. And the reason behind that is if the stock market is going to go back to normal, I expect that a lot of these losses are going to come back pretty soon. We've had an unprecedented amount of shutdown and it's a lot of panic-induced drop. And so taking advantage of it, I have my downside protection from SQ, and if things start looking up, I can sell that. I don't really care if it's at a loss or a gain. Then I can put it in a TQ and take advantage of that. So that's kind of my overall setup for how I would invest $1,000 right now. Obviously, this is only my personal preference and you should do your own research to find out what's best for you. But if I had to start with $1,000 right now and I had to invest, I go 30% into AT&T, I go 30% into Microsoft, 30% into Nike, and then the rest of the 10% is going to be some way of hedging my portfolio for downside risk. So that's what I'm thinking right now. If I had $1,000, that's what I would do. Let me know what you thought about my list, my reasoning for behind why I'm picking these certain stocks, and let me know what stocks you're watching in the upcoming weeks. Thanks for watching, stay inside, and I'll see you in the next video.